What if I told you that the single greatest wealth transfer of our lifetime is not being announced on flashy news networks, but is being orchestrated in utter silence through a series of coded financial documents and geopolitical maneuvers so subtle that most of the world is sleeping right through it? This isn't a conspiracy theory, it's a financial reality check. Imagine a vault deep within the global economic system holding two forgotten treasures, the Iraqi dinar and the Vietnamese dong. For decades, they've been dormant, their true value locked away by war, embargo, and economic isolation. But right now, the keepers of that vault, the central banks and the International Monetary Fund, are quietly, methodically turning the keys. The year 2025 isn't just a date on a calendar, it's the culmination of a decades-long project, a point on the timeline where multiple threads of economic progress, political necessity, and global strategy are converging. The story begins not in Baghdad or Hanoi, but in the marble halls of Washington, D.C. and Basel, Switzerland. The United States Federal Reserve, burdened by a staggering national debt and the looming threat of a global move away from the dollar as the sole reserve currency, is in a precarious position. They need a reset, a way to reassert dominance without causing outright panic. Simultaneously, the International Monetary Fund has been tirelessly working behind the scenes, not with grand pronouncements, but with teams of economists on the ground, implementing structural adjustment programs, auditing financial institutions, and building the necessary frameworks for these currencies to step onto the world stage. Think of Iraq, a nation sitting on a literal ocean of oil, one of the largest proven reserves on the planet. For it to operate with a currency valued at a fraction of a penny is an economic absurdity that cannot stand forever. The recent and very quiet shift away from the US dollar and its oil trades is not a random event, it is the first deliberate crack in the dam. It's a signal that Iraq is ready to decouple its immense natural resource wealth from the fiat currency of another nation and attach it directly to the value of its own dinar. Every rebuilt refinery, every new trade agreement with China and India that bypasses the dollar, every announcement of economic diversification away from pure oil dependence is another brick being laid in the foundation of a new, much stronger currency valuation. This is the why behind the potential revaluation. It's not about magic, it's about macroeconomic inevitability. A stronger dinar would allow Iraq to rebuild its infrastructure without drowning in debt, pay for imports with a currency that holds real international weight, and ultimately take its rightful place as a stable and influential economic power in the Middle East. The silent signals are all there, buried in quarterly IMF reports, in the minutes of central bank meetings that few outside of high finance ever read, and in the steady, unrelenting progress of a nation rebuilding itself from the ground up. The activation sequence has already begun. It's a slow, deliberate countdown designed to avoid shocking the global system, but for those with the patience to see it, the sequence is unmistakable. The countdown clock is ticking, and its echo is being heard not on the trading floors of Wall Street, not yet, but in the strategic planning rooms of central banks around the world who are positioning themselves for the new financial landscape that a dual RV would create. This is the first chapter of our story, a story of quiet preparation for a very loud economic event. But the tale doesn't end with Iraq. In fact, the most compelling part of this narrative involves another, equally dynamic player in Southeast Asia, whose story is just as powerful and whose potential for revaluation is just as real. And that is a story we will delve into right after this. Now let's pivot from the deserts of the Middle East to the bustling economic miracle of Southeast Asia, because the story of the Vietnamese dong is perhaps even more shocking, not born from the pain of conflict like the dinar, but from a ferocious, almost unbelievable, economic ascent that the world has largely ignored until it became impossible to ignore. What if the secret to the dong's revaluation isn't hidden in dusty central bank vaults, but is happening in plain sight on the streets of Ho Chi Minh City, in the silicon-filled factories of Samsung, and in the strategic calculus of global superpowers? While Iraq's story is one of recovery, Vietnam's is a tale of relentless, explosive growth that has officially outgrown its current currency valuation. Think of a rocket, engineered for a journey to the moon, but still being held down by the gravitational pull of its own past. The Vietnamese dong is that rocket, and the countdown to its launch is entering its final stages. The evidence isn't subtle, it's staggering. For the past 2 decades, Vietnam has been not just growing, but consistently ranking as one of the fastest growing economies on the entire planet. A manufacturing juggernaut that has successfully attracted a flood of foreign direct investment that dwarfs many of its regional neighbors. This isn't just about cheap labor anymore. It's about a highly skilled workforce, political stability that fosters business confidence, and a strategic geographic position that makes it the perfect hub for companies desperate to diversify their supply chains away from China. Apple is moving its iPad production there. Intel is building its largest global chip testing and packaging plant in Saigon. This is a fundamental structural shift in the global economic order, and Vietnam is positioned squarely at the center of it. But here is the critical and often overlooked piece of the puzzle. A currency's value must ultimately reflect the true economic strength and productivity of the nation it represents. When your economy is a global powerhouse, but your currency remains artificially low, it creates a dangerous pressure cooker effect. It makes imports, especially the crucial raw materials and machinery needed to fuel this very economic engine, prohibitively expensive. It stifles the purchasing power of your own people, limiting the growth of your domestic consumer market. The Vietnamese government and its central bank are acutely aware of this contradiction. They are not blind to the tectonic plates shifting beneath their feet. Their moves have been calculated and brilliant. They have been steadily building up massive foreign exchange reserves, a war chest designed to defend the dong during any transition and to signal to the world that they possess the financial firepower to ensure stability. They have been gradually allowing the currency to trade within a wider band, a controlled stress test to see how the market reacts, slowly building the muscle memory for a freer float. The silent signal here is not a whisper, but a roar of construction cranes, the hum of automated factories, and the quiet confidence of international investors pouring billions into the Vietnamese stock market and corporate bonds. The revaluation of the dong is not a speculative fantasy. It is an economic imperative. It is the necessary next step for Vietnam to graduate from an emerging market to a fully developed economic leader, to control inflation, to empower its citizens with greater global purchasing power, and to cement its status as an indispensable node in the global trade network. The 2025 timeline is significant because it aligns with key strategic national goals and the culmination of several multi-year economic plans. The world is watching, and the smart money is already positioning itself. The activation of the dong is not about finding a hidden switch. It's about acknowledging that the rocket has already been built, the fuel has been loaded, and the launch sequence, marked by every new factory opening, every trade surplus announcement, and every strategic partnership is already underway. The question is no longer if, but when. And when it happens, the shockwaves will be felt across every Forex market on Earth. But understanding these two individual stories is only half the battle. The true masterstroke, the event that will redefine global finance, lies in the stunning strategic synergy of activating them together. So we arrive at the grand finale, the masterstroke that ties the fate of the dinar and the dong together into a single, earth-shattering event. But what if the real story isn't about two separate currencies revaluing in isolation, but about a coordinated, strategic maneuver on the global chessboard so audacious that it could deliberately and systematically dismantle the dollar's dominance overnight? Forget everything you thought you knew about currency revaluations being isolated incidents. The true shocking hook is that the simultaneous activation of the Iraqi dinar and Vietnamese dong is a calculated, geopolitical one-two punch designed to create a new, multipolar financial world. Imagine a world where you are no longer solely reliant on the health of the American economy for your own financial security. This is the world that certain global powers are quietly, but urgently, building. The United States' exorbitant privilege of printing the world's reserve currency has allowed for decades of unchecked debt accumulation, and rival nations have been patiently waiting for the right moment to stage an intervention. This dual revaluation is that intervention. It's a perfectly synchronized strategy. Iraq, with its colossal oil reserves, represents a play on tangible, hard assets, the very bedrock of the global economy. A revalued dinar backed by oil and increasingly divorced from the dollar instantly creates a powerful new petrocurrency, a viable alternative for nations seeking to break free from dollar-denominated oil trades. This doesn't just weaken the dollar, it fractures the entire petrodollar system that has underpinned its strength for 50 years. Now enter Vietnam, the manufacturing and technological counterweight. A revalued dong validates the shift of the world's industrial base from China and into Southeast Asia, creating a second formidable currency bloc rooted in innovation, trade, and staggering economic growth. Together, they don't just offer an alternative, they offer a complete ecosystem. One provides the energy, the other provides the goods, and both would be transacted in their own strong, independent currencies, bypassing the dollar entirely. This is the silent signal that becomes a deafening alarm for those who know how to listen. The year 2025 is not a random guess, it's a window of opportunity aligning with political cycles, the maturity of international debt agreements, and the critical mass of global frustration with the current monetary system. The central banks involved are not merely spectators, they are the architects, carefully managing the money supply, orchestrating international agreements, and preparing the digital infrastructure for a new era of currency exchange. They are ensuring that when this happens, it will be orderly for them, utterly disruptive for the unprepared. The data doesn't lie, the trade agreements, the gold acquisition sprees by Eastern nations, the public statements about de-dollarization from economic blocs like Barras, all of it points to a coordinated effort to dilute the dollar's power. This dual RV is the lever they will pull to reset the scales. For you, the investor and the seeker of truth, this represents the single greatest financial opportunity you may ever encounter. This is not about getting rich quick. It's about recognizing a historic paradigm shift in global power and positioning yourself ahead of the tidal wave. When this change occurs, the wealth will not flow to the hesitant or the skeptical. It will flow to the informed, to those who did their homework, who understood the narrative, and who had the courage to take a strategic position while everyone else was still asleep. The clock is ticking, the pieces are moving on the board, and the final move is imminent. The question is, will you be a spectator watching history unfold on a screen, or will you be an active participant ready to secure your financial future in a new world? The story is now in your hands. If this narrative has resonated with you, if you feel the urgency of this moment, then the time for passive watching is over. Your journey to true financial intelligence starts now.